Hello there, traders. Welcome to today's live stream. It is Tuesday, the 20th of August. So we're getting ourselves through August now. And yeah, been some interesting, obviously, market movements. Dollar CAD finally saw some movement over Friday and yesterday, ended up taking profits on this move. So we'll talk a little bit about dollar CAD profits. And yeah, so very interesting movements within the markets. Just see if we can put some banners up. Do the banners have to go over there? Maybe they do. Hi, Harmy. Hope you're well. We'll get going in a couple of minutes or so. Just give people opportunity to jump in if they feel like they would like to. I might just put a post out. In the background. Hi, Royston. Haven't heard from you in a while. Hope you're well. Let me know how you've been, mate. Been can't remember the last time I saw you in a stream, actually, Royston. Right, let me grab this. Hi, Ratish. Hope you're well. Been busy the last few weeks, Royston. No problem, mate. No problem. Well, good to see you back. Hope you're back into the swing of things. Hope you've been busy in a positive way. Hype in the market. Yeah, live. We're live every Tuesday and Thursday. So welcome to the live stream. If this is your first time, then what we typically do here is we go over some charts of interest. We go over some of the data that's coming out. We go over some sentiment analysis as well, including a currency strength meter. We talk a little bit about the commitment of trader reports here as well, see what the big institutions are doing within the markets. And we also talk a little bit about seasonality as well. But yeah, we feature a lot here. I like people to get involved. So if you want a chart analyzed or you want me to talk about a particular subject, then please fire that in the chat box. But yeah, I'm very good. Thank you. Hope you are well as well, Ratish and Vincent, and in the market as well. Hope you're all well. Right. Let's kick off with a bit of dollar CAD then. So we've been short dollar CAD, right? We've been short dollar CAD since the 139s. And I added 2 positions short into dollar CAD recently. Well, most recently last week. And we didn't really see much momentum last week until Friday. Friday was the day that really kind of drove markets, drove that dollar weakness again. And the market has come down into this 136 handle. Now, there is some data coming out, or has come out, sorry, out of Canada. Whoops, where's that gone? Let me grab this back. Let's just move this over a little bit so you can see both. And we had some inflationary data, which has pushed CAD into that 136 level, or dollar CAD into that 136 level. So this is what we were looking at. Let me get a pen tool up as well. I forgot to get my pen tool up. Ratish, thoughts on Kiwi? Yeah, we'll take a look at Kiwi. Vincent wants to have a look at Euro Oz Long, which is interesting. So we'll have a look at that as well. But yeah, let's have a little look at the Canadian dollar. Let me actually zoom in a little bit here so you can see this a little bit better on the screen. So what have we had? We had inflation data. We had consumer price index month on month, or CPI. We had median CPI and we had trimmed CPI. Now, trimmed CPI is basically what you know as core CPI. If you look at sort of US dollar data and things like that, that's basically what core CPI is trimmed. And we actually had a little bit more downside than we expected here on the core CPI. So we're expecting well, this was actually previously 2.9. We're expecting a forecast of 2.8, and we had an actual of 2.7%. So a little bit on the downside there. Inflation coming down in Canada, which is something that consumers will want to see, obviously. This has been revised down to 2.9 as well. CPI month on month, which includes pretty much everything. You've got 0.4% there, so up from the minus 0.1%. So really speaking, it's been a mixed bag of results here for CAD CPI, and you can see that kind of in how the dollar CAD price is trading at the moment. We've come into that support of 136, starting to see a little bit of buying again, but ultimately we're just kind of in that zone of support now. And I don't really want to be short dollar CAD anymore. We've got short, like I said, last week. We were discussing, I'll say last week before that, probably we've been short for about 2 or 3 weeks now on dollar CAD. And 139 was the area or the zone of interest, which is this kind of weekly area of resistance that we spoke about, these weekly range highs. And we had a very nice reaction from that 139 level. We saw a break of the sort of overall bullish sort of trend that we were having at the time as well, break of those lows. And yeah, we've just continued to sink lower. And this was really driven by the commitment of trader report that we looked at. Obviously, the COT report that we were watching at the time was showing really heavy buying of CAD futures on the commercials on the commitment of trader report at extremes we hadn't seen for, I think, since the 80s. So that to me was very significant. All we needed to do then was wait for price to go and trade into a area or a zone of significance, which was this 139 up to sort of 139.75 handle. And then we've had that move down. Now we're at an interesting level, right? We're at this level here on dollar CAD, which is the 136 handle, which has pretty much been the low for the entire I was going to say the low of 2024. It's not been the low of 2024, but it's been the zone of interest for 2024. We can see since the start of the year, the market has used this zone as a resistance point, and it's used it as a significant support point, and we're back there now. So is this the area where traders that have been short from 139 are going to start taking profits, and they're going to start taking some positions off? Are we going to see a short-term pullback potentially? I only really want to get short dollar CAD again if we see a break of 136 now, because I think that would open up a move lower, which again we've kind of been talking about since price retested the 136 handle. I didn't quite expect a move at the time back in May and June that we would see that sort of punch up into the 139 handle, but we did, and we've seen that significant reversal now. So for me, dollar CAD off the table. It has been something we've watched for a while, especially when it comes to the currency strength and weakness table. You can see dollar CAD bearish. It's been on here for the past few weeks now. So glad we capitalized on it. Glad it was something that we had as a trading idea. But really speaking this week, I'm very much focused on the US dollar. If I just zoom in a little bit here as well, you'll be able to see why. And basically, you can see that the US dollar is one of the weakest currencies at the moment. I had the same with Kiwi when I did the analysis on Kiwi as well. I felt the New Zealand dollar was a little bit weaker. So Ratish, if you're looking at Kiwi at the moment, I would say I'm more bearish on Kiwi, but I haven't actioned anything to suggest that Kiwi is short at the moment, because none of the pairs that I had a little look at that I wanted to be sort of trading Kiwi against really had any kind of setups on. So I was looking at sort of Aussie Kiwi long, pound Kiwi long as well. And then I was looking at potentially Kiwi Swiss and Kiwi yen shorts, but Swiss and yen have been in that reversal zone for a good while now. So I don't know whether we're going to see that momentum continue there. But basically looking at potential moves on sort of pound US dollar, I like the idea of being long cable. Euro pound, I like the idea of being short that market, although I had a really good seasonal play long on this, didn't actually take it, and then I felt the seasonal might continue, but it hasn't. Pound has really started to continue to push, and we saw a real kind of flip in sentiment on euro pound, which I'll go talk about a little bit later. And then obviously pound Kiwi long is something I'm pretty interested in as well, but no real kind of trade setups on those markets. That's why if I go over to the heat map and we have a little look at this, if I just zoom out a little bit, move this over, the green light basically means those are the markets I want to be trading this week. The orange is basically what could be setting up for the week, and then the grey is just a no-go. Shouldn't be touching those currency pairs in terms of currency strength and weakness. So like I said, very much focusing on those dollar pairs at the moment. There are a few potentials like Aussie Kiwi, Euro Oz I've got on here, Vincent, as potential to be bearish. And again, this is all come down to our sentiment of why we want to be trading particular markets. Now, let's go have a little flick over then to, so we've kind of discussed dollar CAD. Let's have a little flick over to our Euro Oz, okay? Because you want to take a look at that. And then Ratish, I'll come back to Kiwi pairs, okay? So let's have a look at Euro Aussie. That's Euro Kiwi, Euro Oz. Let me just delete all these drawings off. Let's go to a weekly chart. So what can we look at in terms of the weekly market on Euro Oz? Well, we can see that we've come up, it's a bit range bound, right? When we look at it on a weekly point of view, same with the monthly as well. I'll just delete these lines off as well. I'll add them back on at a later date. But if we look at the monthly as well, pretty much within this trading range, right? Sort of highs up at that 1.775 handle, lows could be anywhere between sort of 1.6040 down to the 1.5858. So very much in this kind of tight trading range on the monthly chart, and you can see we've kind of rejected those higher prices and the market's moving lower. Now, whenever I look at doing analysis within the markets, we use the WCS method, okay? Now, this is a method I've created myself. I've not got this from anybody else, but this is how I look and how I view the markets. It's not a suggestion for you to do it this way. It's just how I do it. If you can take a little bit of info from it and maybe it helps you, then fantastic. If it doesn't, then obviously, take what you want from it. But the WCS method is basically understanding why we want to be involved with a currency pair in the first place. And then it comes over to the conditions of that market. Okay, do we have the correct conditions? And then it comes down to strategy. Okay, what strategies can we apply to take advantage of those? Okay, so when it comes to why do you want to be involved with Euro Aussie? Now, looking at my currency strength meter and currency strength analysis, I've got the euro as fairly sort of neutral, and the Australian dollar was one of the best performing currencies last week. So I've got Aussie as strong. Now, we did have the RBA meeting as well, RBA meeting minutes recently, which was last night, I believe. And in the RBA meeting minutes, the RBA were talking about holding interest rates, okay? Now, that might not necessarily be significant, but it is, right? It is. Why? Because other central banks are cutting rates, right? We've got the Federal Reserve that are pricing in a significant cut. We've got the BOE that have been cutting interest rates and likely to cut further. We've got the RBNZ that cut interest rates, obviously Bank of Canada as well. So a lot of central banks focusing on when they're cutting interest rates. RBA is holding. Now, why are they holding? The employment rate has been fairly good in Australia, right? Employment's been good. Inflation's coming down. So they've got things at a nice level, right? Where you've got the mandate of full employment, employment's going up, but they've also bringing down those inflationary pressures. So they're likely to hold interest rates. So to me, that's a positive, right? That is a big positive for Australian dollars. You know, I want to be looking for those potential longs on this market. Now, if we look at Euro is fairly neutral, but I would say they're teetering more towards downside. And I think this is going to come, or this will be based on how the PMIs go this week. So if we go just have a quick look at the data again. On Thursday, we've got French manufacturing PMIs, services PMIs. We've got German manufacturing PMI and services PMI. And I think this is where the euro is either going to become significantly stronger or weaker again, right? And I'm really going to be checking out this German flash manufacturing PMI, because if we just have a look at the chart here, the German manufacturing has been abysmal, right? We've been below that 50, below that sort of growth area, in that sort of contraction period, and we've been there for a good while now. And we were on the trend up. You know, if we were looking at the averages, we were on the average moving higher for the manufacturing PMI. But the past two numbers have been pretty poor, where we've seen an actual sort of decrease beyond forecasts. So that to me is quite significant. So if we get another one that sort of beats those forecasts to the downside, I think that could put some significant pressure on the euro. Okay, so that's what I'm kind of looking at here. Will euro Oz, in my opinion, will it stay within this trading range? You know, potentially there's a good sort of chance that could happen. So when I go and look at the sort of weekly chart, then I'm trying to look at how price is closing. We've got a strong bearish close last week. This week, we're pushing a little bit lower. And I'm trying to sort of identify levels within that. So sort of mid-range, we've got this kind of 1.64 handle. You can see that has been quite significant over sort of the end of 2023 and into 2024. And then you've got sort of your lower demand zones, which would be down towards that kind of 1.6 or 1.60 sort of 50 area. So I like the idea of potentially trying to play this range, to be honest, Vincent. Looking at Euro Oz as well, there was a very familiar trading pattern that formed. You got that sort of left shoulder, head, right shoulder, you know, in terms of a head and shoulders pattern. Market has breached that yesterday. So I quite like the idea of being on the short side of this market. It's just kind of, where do we get short? You know, do we look at sort of short and, you know, on a pullback, or do we look at some kind of breakout patterns to form? So that's what I'm kind of just thinking about at the moment. If I go take a look at the 4-hour time frame, you know, we're just consolidating in this zone at the moment. So there's not any kind of aggressive movement here. Maybe that's because we're kind of at a slight area of support. We've got the 200 moving average through here. But I quite like up at this kind of 165.50 area. You can see that there was support, you know, could that potentially become resistance, and could we start seeing price continue to trade lower because of it? So Euro Oz, I quite like the idea of actually being on the short side for now. I think that it's going to depend, though, on how the PMIs go on Thursday, essentially. Do the PMIs start to show us that there is a possibility that the euro is going to gain some strength, and the ECB are going to potentially go to more of a hiking period? Well, not hiking period, because I don't think any central bank's really going to hike apart from the Bank of Japan, but maybe like a holding period, which is what we kind of seen so far, right? We've seen a lot of central banks just cut rates and then hold to see if that kind of improves their inflation pictures. But yeah, I like the move lower. I mean, we do have that sticking point at 164. So if you were more on the long side of things, then maybe down in towards that zone here, where you've got all that kind of previous history of resistance, could that turn into support? You know, that could be something you look at in terms of that. But in my opinion, I like a little bit of bit downside on Euro Aussie. So hopefully that answers your question. Ratish, your thoughts on Kiwi? Yeah, really interesting market, right? Really interesting market. We've had significant rallies on the New Zealand US dollar. And this is something that I didn't necessarily expect. We talked about, I mean, we were kind of short back in July when we broke this kind of 6050 area. I think my last short on Kiwi dollar was 6060s. And we broke down, we came into this demand zone here on this weekly chart, and it held quite aggressively. And then we had a bit of a choppy week. That 5th of August week was very, very choppy. And then we had the RBNZ cut interest rates. So this was where the RBNZ cut rates was there. Market reacted bearish to that data, but we've just shrugged it off. We've completely shrugged it off. Now, I don't know whether that's because of the sentiment in the market at the moment. Obviously, the US dollar is a weaker currency. So we're starting to see the commodity currencies start to strengthen off the back of this. Could be down to the fact that we've had a very significant decrease in volatility. When we look at the VIX and the volatility index, we've had a significant decrease here, which is going to switch market sentiment, right? We'll move more into those kind of risk on situations, and usually commodity currencies perform pretty well in those situations. We talked about, obviously, dollar CAD short. We thought that CAD would gain some significant strength, and it has, and the market's moved into that mode. We've talked about the Australian dollar as well, with the market coming into this area of support. But we're pretty much just recovering that madness that we saw in the market over the past few weeks. The market is just completely kind of shrugging that off now. Dollar has now become the sort of main currency to come and sell, and we're seeing that momentum coming into this trading week. And I don't think this is necessarily going to change until the end of the week. Okay, so I'm thinking that we might see a continuation of dollar weakness into this 101 zone, and we might see a rebound here. And the only reason I feel like we might get a rebound in terms of US dollars is because of the Jackson Hole Symposium coming up at the end of the week. So Jackson Hole is just basically, or the symposium is just a big event where all sort of the central bankers get together. They talk about monetary policy, X, Y, and Z. You know, there's a big thing about it on Bloomberg. If you go on to Bloomberg, you'll see all the so they usually travel to the venue where they're staying and stuff like that, and they have like different kind of speakers come on. It's quite interesting watch, to be fair. But we've got Federal Reserve Chairman Powell speaking this week, and this will be the first time Powell is speaking since all the sort of madness that happened within the market. So is he going to talk about it? You know, I think there's sort of three things that we kind of need to watch from that event. I'll probably go into detail a little bit more in a short video as well this week. But three things that we really need to watch is the language from Jerome Powell. How is Jerome Powell going to be sort of discussing the recent fragility within the labour market that we've seen? Obviously, the upticks in the unemployment rate. Is he going to talk positively about inflation? Because obviously inflation has been coming down in the US, which has been a huge positive for them and their sort of mandate that they're looking at to try and control that inflation. And obviously the market's trying to price in how aggressive the Fed are going to cut, right? We had that madness on that Monday just because the market was pricing in emergency cuts and the market went extreme fear. Now, we did talk about the fear and greed index within the market. So let's see if I can get it up again. Let's have a little look. See if this has changed. So this has actually changed quite aggressively. If you were watching on Thursday, we were looking at this, and it was in the extreme fear area. Okay, now what this is basically is just a 7 fear and greed indicators, and I didn't feel like the market was in extreme fear at all, because of how the volatility index came in lower and how the S&P 500 reacted to the move that we saw. We've just completely kind of recovered it. So I always said the market was more neutral than it is in greed, but we're starting to swing that way, aren't we? You're starting to swing into that sort of greed area. I think that will obviously come into play if we do start to see the S&P 500 continue its rally. You can see that we're pretty much heading back to all-time highs here on the S&P 500, and that was a significant move within the markets. With that move obviously lower, and everyone was panicking, and look at that recovery. So I don't really feel that the market is in that fear area. Don't think it's in extreme fear area. I actually think there's a decent possibility that we'll get another bull run. 2025 is more my interest in terms of looking at that potential downside. But to kind of round it all up, we were talking about Kiwi and why this market's moving to the upside. And essentially it's because we've got significant US dollar weakness within the markets. The volatility within the markets has moved lower. So the market sentiment is moving more towards risk on. And typically in those environments, you see commodity currencies like the New Zealand dollar, like the Australian dollar, like the Canadian dollar be supported in those conditions. And we're starting to see it move higher. Okay. So that's obviously being felt across the board as well. If we go over to the likes of Kiwi, yen, although the yen's still a strong currency, you can see we're pushing higher here. Kiwi, Swiss as well, pushing higher. Kiwi, CAD. CAD's been a strong currency, and Kiwi's, wiping the floor with it at the moment. So, yeah, very interesting market moves going on in terms of the New Zealand dollar, but it's looking quite positive. And I think if the sentiment doesn't change, I mean, we are coming up into another strong level of resistance, right? This weekly area of resistance. So maybe we will see a bit of a sort of pullback from that area. But I think if we take out the 62s, we could be heading up towards that sort of 63 area, potentially the 200 moving average there on the weekly chart, which would be, again, very significant move. So, yeah, although the currency strength meter is kind of pointing to a little bit of a weaker Kiwi, it's been the most positive currency this week, and I wouldn't really want to bet against that at the moment. So, yeah. Let's go take a look at euro dollar then. So euro dollar, another market that's been performing very, very well. Again, this could change. This could change by Thursday, but very positive in the early stages of this week. Last week was obviously a very positive week as well, in a little bit of a resistance zone. So I'm not favoring euro longs here because I don't like to buy at highs. So I kind of look at things as, if I want to be a buyer of this market, where do I want to buy it? I want to buy down here where that support is. I don't want to buy here because that is an area where traders have took profits in the past. So essentially, will traders that are long here, here, and here, are they going to see this as a good place to take profits off the table? So that's why I don't really like the idea of being long euro Aussie, Vincent, because of this this resistance here on euro dollar. Oh, thanks, Royston. I forget to change the banners whenever I move through. So thank you for that. Thanks for spotting that. But yeah, so euro, is another strong currency at the moment. Well, I say it's strong. It's not really that strong. It's just stronger against the US dollar. But this is just the inverse of what's happening here on the US dollar index. So if we do see the continuation down towards 101s, then euro US dollar could be up towards the 111.50, perhaps even into the 112s, so that would be again very, very significant for the markets, I feel. We're just getting the open now. I'm just having a look at the S&P 500 on lower time frames, just seeing how the market's kind of opening with the US. Let's take a look at cable. Cable has been on a mission. We did really well in terms of shorts at one spot threes, 130 handles. We shorted in around there. Market came down towards the 127s. Still like downside at this point across the board, but we had this huge breakout, and then the markets just continued to drive higher here. looking like we're going to get the 131s. I was looking at cable this morning. I was looking at this 4-hour chart, and look at this sort of breakout that we've had, continuation. So although I don't like the idea of necessarily going long here because we're at resistance, it just looks like a very strong currency. You know, it looks like a strong currency. We've had a very aggressive move higher. Do I want to necessarily go against it at the moment? No. So, you know, this market could continue to drive up towards that 130, 131 handle. Just got an alert sitting around the 13040s just in case we do get any kind of rejections in on this market. But yeah, cable's looking pretty good. Like the idea of seeing a little bit of a move higher. Now, this kind of brings me on to sort of euro pound. Obviously, the market's kind of really shifted recently in terms of pound sentiment, and euro pound, I really like the upside here. You know, there was a seasonal pattern on euro pound for the 2nd of August to go long, which was this candlestick here. And usually when I look at seasonal analysis, I like to kind of give it a little bit of a buffer. That's how I was sort of shown to read it. You shouldn't just look at the exact day. You should give it kind of like a couple of buffers. So if I actually bring on, let me just log into my markets made clear. And then I can kind of show you that. And then we'll move on to gold, because obviously gold is hitting all-time highs, right? And we'll go from there. But this is the seasonal analysis on euro pound. So what you've got here is a seasonal chart. You've got the current year, which is in green, and then you've got the overall years, or all years, well, say 20, not all years, sorry, 20 years on the orange line. You can have all years on here as well, which is the blue line, but we've only got 30 years of data anyway, so we don't need to necessarily put all years on. But typically there is a seasonal play which forms on August the 2nd, and it completes usually around August the 23rd. Now, we kind of had a little bit of an early jump start on it. It was about August 1st where we actually saw a significant rally on the euro pound price, which was here, right? This is where we talked about potentially getting long. And yeah, we had that significant rally. Now, I thought that we would get the continuation of that, because although this is the one thing with seasonal plays you've got to take into consideration, what Market Made Clear do well is they show you the seasonal correlation between this year and the previous years, which I find very, very useful, to the point of it says it's 40% with all year, 35% in 20 years. So with that, you know, I would like that to be above 50% on both of those. That can be something which is significant in the market, and which is why I'm going to show you gold in a minute, because there is a significant seasonal play on gold right now. And the fact that gold's at all-time highs makes me think that it's going to continue higher. But if we kind of look at the all years, you can see that we actually sometimes get a move up till October 8th before we see the decline. So I was wondering if price would kind of follow a similar path here, but we haven't actually had it yet. You know, I was looking at that. But if we look at the 4-hour chart, you know, typically what I would look for is changes in trend. So, you know, we had this move here. I felt that this zone there could be a good support. The market did try and make a move from this area, but then it just faded. And now we're just kind of consolidating. So I think if we get back above the 85.50s, then I'd be interested. But when I look at currency strength and weakness, and I think, well, is the euro stronger than the pound? I don't see it at the moment. I don't see it. So yeah, not feeling that one anymore. I'll wait to see if we get any kind of significant pullbacks on the weekly chart. You know, maybe we'll get a move back down towards this time kind of area in here, and then look for some options at that point. See which one's kind of shaping up for some moves in the future. But yeah, euro pound coming down a little bit. What are the markets that we want to look at? We want to look at gold, right? Let's go take a look at the gold market, because look at that, all-time highs again. This is a weekly chart. Market's moving significantly higher, and I'm not surprised. Okay, we're not surprised. Why are we not surprised? Because this is something we've been talking about for the past few weeks. And if we go and have a little look at metals, gold, I just want to show you the correlation between what's been happening this year and what's been happening throughout all year, right? Now, look at all years. So this is 49 years worth of data, okay, that Markets Made Clear have got for us here. So just think about that, 49 years of analysis. The current year is 88% correlation with 49 years worth of data, which is good, right? Really good. If we look at kind of recent 20 years, 85% correlation. Now, I don't know what it would be with 10 years. 10 years, usually there is a little bit of a kind of stalling point through August. But, obviously that's just a little bit more sort of recent, the averages of the more recent. But typically, there is a long play from August 16th till September the 2nd on gold, right? And if we go take a look at gold, look what's happening. Market's broken out to the upside here, broken those all-time highs around that 24.84, and price is starting to push a little bit higher. Now, if we go look at the 4-hour chart, we had one of those nice little trading patterns recently where the market kind of consolidated, broke out, and it looks to me like this could be a potential for gold to continue to move to the upside. Now, the only real reason I like this a lot as well is because of our commitment to trader reports. Okay, now I use COT reports all the time, and they're very good when it comes to commodities. Okay, so we have a little look at gold here. On the commodity front, nothing's really changed from last week, right? We were talking about we need to see short contracts coming up into levels of extremes. And to me, I want to see it come up into the similar extremes that we saw back in 2022, March 2022. And we're not there. Contracts aren't at that point. So for me, I'm not necessarily interested in being on the short side of gold for now. I think that we want to see these commercial positions anyway much higher. And the reason why is because, right, the commercials are hedges within the markets, but they're also businesses, right? They are usually so if you think about gold as in like you produce gold, you mine it, you make it into products, you sell it, right? So you would think that with gold prices being so high that the producers would be selling at aggressive rates, right? I would be expecting them to sell at aggressive rates, but they're not. They're really not. So that to me in itself makes me think that we haven't got an extreme yet. We have not got the extreme. Ratish, you make a very, very, very good point here. Silver to follow gold. Yeah, I think the same, right? I think the same. I think silver will potentially follow gold. And we'll have a little look at that in a second. But look at this price action. You don't really want to go against that on the weekly chart as well. This has just been on a ridiculous sort of bull run on the weekly chart. So yeah, I like the idea of price continuing to trade higher. We've got, if you think about the why, why do we want this to go higher? Well, you've got US dollar weakness. Now that might only last till the sort of end of the week, but we'll see. But we do have dollar weakness in the market. We have commitment to trader reports, not at any kind of short extremes. Seasonally, there's a long play as well. So when you try and put things together to form a bit of a bias within the market, then that's a good reason why, right? And then you've got the conditions of the market as well. So what are the conditions doing? We're pretty bullish here, right? If you're looking at it from a technical perspective, you would say that's bullish. And then the 4-hour is also kind of bullish as well. So, to me, everything's kind of pointing a little bit more north for gold in the short term. Whether that's reflected in retail sentiment, we'll have to have a look. I think a lot of retail will probably have been short And the reason why they would have been short is because you've got a range and they'd be looking to short the range. Okay. But yeah, silver could easily follow it. Silver could easily follow it. You know, look at this nice little move down from the 26s. I love the monthly chart on silver. I mean, look at that technical analysis there. That needs to be gone, doesn't it? Silver I really like. You know, we've kind of been pretty much bullish silver for a while now. You know, arguably probably my trade of the year, silver long from $22. I think that was probably my kind of trade call of the year so far. And this has been, you know, really bullish. And there are multiple components to why silver could remain bullish. One of those being China is getting heavily invested in silver at the moment. They are revamping renewable energies over there, and they are significantly investing into solar panel technology. And the key material within solar panels is silver. And because silver is a bright byproduct of other mining, it can be scarce, right? And that can give a supply and demand factor on silver. And I think there's a good chance that we could see silver longs up towards that $35 target, you know. And like I said, this to me has been one of those markets which we've been bullish on since $22. You know, we had a potential short through here at $30.50 because we felt, or we looked at the commitment of trade reports and they were selling silver heavily, and that played out. And now we're starting to see that nice little move back to the upside. So yeah, I like silver a lot. How would I trade it? I'd be looking for some kind of daily pullback now. You know, I'd be looking for some kind of move lower, you know, maybe in with this 8 moving average that I've got on the chart at the moment, or at least back towards some kind of area of support. You've got this kind of major support through here as well. So anything around $29 and below, I quite like being in around. So, you know, I'm talking sort of in this zone here or a little bit lower towards the 27s I quite like. But yeah, I've got a feeling this might try and travel its way up to sort of $30, $31, maybe even to the 32s. And then if it can take out 32s, then that $35 area might not be too far off. If we take a look quickly at the gold silver ratio, you know, typically I like to look at where the market could be favoring in terms of gold silver. That obviously changed recently when we came into these kind of swing lows here. You know, when back in June we started to see a little bit of a turnaround, and then July we had the big turnaround. We look at silver in July, it moved lower. Okay, and that's because investors were more heavily involved with gold. You can see that by July moving higher here. Then they were heavily invested in silver. Now, if you look at the gold silver ratio now, we're back up at these highs again. So are we going to be looking at investors are now favoring silver over gold? And could we start seeing a little bit more of a play here with silver moving back to the upside? You know, I really like this market. I think this is arguably, I'd say arguably better value than gold, just because gold is also expensive now, right? If you were to go and like buy gold physically, it's the most expensive it's ever been. If you were keeping gold to hold, to invest, it's the most expensive it's ever been. So you're not going to get as much for your US dollars as you would with silver, right? So you might go over to silver because you're going to get more for your US dollars at the moment. But that could soon change, right? Look at the monthly charts. You know, could we be seeing a silver up at sort of $48? I remember this so vividly as well, back in 2010, back in 2010, 2011. I remember someone was talking to me about silver around these times. And then again, back in 2020, when we saw this little bull run here. But yeah, around that 2011, 2012, I remember vividly some people asking me if they should be involved in silver longs, and typically when that happens, you get out. You know, if your mate down the pub asks you about a chart or about a commodity, you know, if your mate down the pub starts talking about investing in gold, then that's probably the job done. You know, you probably need to get out of the market at that point in time. So that's just something to take note of. How long have we been going? We're going 45 minutes. So yeah, just kind of going back to the currency strength meter then, a lot of it just kind of focusing on some dollar weakness within the markets at the moment. So that's what I'm kind of focused on, down into the 101 area, this zone. I think, you know, there could be a good chance that dollar weakens into that level. I'd be very cautious towards the end of the week trying to sell dollars in this zone because of the central bank speeches that are coming out from Federal Reserve Chairman Powell. But in the meantime, I think that's going to influence pound prices higher. Dollar CAD, we're in that sort of 136 zone that we need to just be very, very cautious on. Obviously, Aussie and Kiwi performing pretty well because of that. Aussie's got a little bit of more room to the upside than Kiwi does. Quite like Euro, Oz downside, but just waiting to see if there's any kind of opportunities there. The only other one I liked was pound Kiwi, but obviously Kiwi's been a bit stronger at the moment, so we're not seeing any kind of move higher from that, although we've just come into this little demand zone in there. So not necessarily a bad area to look at a short-term long position. So guys, I'm going to leave it there. Not really anything else to report on. Let's have a quick flick over to Bitcoin. We did end up coming into that 52K level, and we've rebounded from that. The market's going a bit sideways, and that's typical of a sort of halving cycle. Usually a year after that, you can see a bit of a Bitcoin sideways market. Plus, the market has been very erratic recently. I think if we do see risk on return, Bitcoin will move higher as it's classed as a risk asset. So I would think we'd get some higher movement there. So, all right then, guys, I'm going to leave it there. Thanks to everybody that joined and watched as usual. Really appreciate you all. If you could leave the stream a thumbs up if you enjoyed it, I would also really appreciate that. Lets me know that you enjoyed the content here. Safe trading this week, although there's some decent moves in terms of, you know, that dollar downside that we've seen in the market. I'd be very cautious of being short dollars into Friday. Okay. Thanks, Royston. Harmy, please take a look at Aussie Kiwi long at current levels. I'll quickly go over this then, just very, very quickly. You know, I like Aussie long. I liked Aussie Kiwi long, but we've not seen a follow through on last week. Last week was bullish. Yeah, it's just not typical of what I would expect at the moment. You know, markets kind of come back into that resistance level, rejected. Yeah, I don't mind longs there because you've got that support of the previous sort of highs, I guess. I would be watching how the 4-hour played out here. I think if you get a consolidation on the 4-hour, then you're more likely to trade lower. If you get a nice little breakout there, then yeah, you know, I quite like it. But I'll be watching this zone very closely. It's been an area where buyers obviously came in the past. So yeah, I'll be watching to see how that kind of plays out through there. Okay, right, I'm going to leave it there, guys. Thanks for watching. I'll catch you on Thursday, same time. And yeah, safe trading, and I'll speak to you then.